Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GR Lifestyle Company Limited annual report. GR Lifestyle Company Limited offers a diverse range of businesses and services through its two main segments, property management and property development and investment. In the property management segment, the company provides various services including property management for office buildings, residential properties, and car parks. This includes heat supply and maintenance services for heat exchange stations and pipeline networks. The company also offers general management services such as repair and maintenance of buildings and fire safety equipment, as well as facilities management for residential and commercial property projects. Additionally, GR Lifestyle Company Limited provides property management services to vacant properties, catering to the needs of property owners who require assistance in managing their unoccupied properties. In summary, GR Lifestyle Company Limited's businesses and services include property management for office buildings, property management for residential properties, car park management, heat supply and maintenance services, general management services, repair and maintenance, facilities management for residential and commercial projects, property management for vacant properties. GR Lifestyle Company Limited market capitalization of $8 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that GR Lifestyle Company Limited holds a significant advantage in their industry. GR Lifestyle Company Limited trades at a higher price-to-book ratio of 8.42 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company can be attributed to several key factors. Strategic acquisitions, such as the purchase of Chunyu Doctor, have contributed significantly to revenue expansion. The company's expansion into AI-powered high-quality healthy lifestyle services has also been a major driver of growth. Furthermore, the increase in core asset boundary and growth in stable rental incomes from relevant properties have added to the revenue stream. The company's focus on key populations such as the elderly, chronic disease patients, mothers and children, and family units has also led to increased revenue. Additionally, the development of property plus healthcare, integrated services, and digital transformation of medical services through AI-powered technologies have been instrumental in driving growth. The exercise of share options, investment in premium property asset management and related services, and expansion into international markets have also contributed to revenue expansion. On the other hand, there are limited instances of revenue decline mentioned in the summary. A slight decrease in property development and investment segment revenue is noted, as well as a decrease in UK revenue by 11.4%. However, these declines are relatively minor compared to the significant drivers of revenue growth. The net income of the company remained relatively stable between 2025, with a figure of $8,354,000. However, there is conflicting information regarding the change in net income compared to previous years. While one source suggests no significant change, another indicates a decrease. In terms of profit margins, the available data shows an increase from 12% to 15%. This improvement in profitability can be attributed to various factors such as cost-cutting measures, efficient resource allocation, or strategic pricing decisions. The exact reasons behind this increase are not explicitly stated in the provided summaries. Nonetheless, it is clear that the company has managed to enhance its profit margins over time. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. As of December 31, 2025, the company had accumulated a substantial amount of operating cash flow, totaling $839,484. This figure represents a notable increase compared to previous years. A closer examination of the company's operating cash flow reveals that it has been steadily increasing over time. In 2025, the company generated an impressive $907,814 in operating cash flow. This positive trend suggests that the company is successfully managing its day-to-day operations and generating sufficient cash to support its growth initiatives. The generation of positive operating cash flow is a significant achievement for any business, as it indicates a strong ability to cover operational expenses and invest in future growth opportunities. The company's success in this area bodes well for its long-term financial health and stability. The company's debt level has experienced significant changes over the past year. According to the financial reports, the total debt level increased from HK $4,603,293,000 in 2024 to HK $4,788,583,000 in 2025, representing a rise of $185,290,000. Additionally, the outstanding balance of bank and other borrowings increased by $134 million. The interest expenses have also seen notable changes. The interest paid for bank and other borrowings increased by $26,971, while the total interest expenses rose by $4,222,000. Furthermore, the interest expense increased from $152,510 in 2024 to $163,917 in 2025. Overall, these figures indicate that the company's debt level and interest expenses have experienced significant increases over the past year. The company's performance varied across different segments and regions. In China, the property development and investment segment, as well as the domestic property management business, performed well. Beijing, China was a standout region due to the strategic acquisition of Chunyu Doctor. The property management segment in China also showed positive results. However, not all segments fared equally well. The property development and investment segment outside of China, particularly in the UK and USA, struggled with negative revenue and results for both years. This suggests that the company's expansion efforts in these regions were unsuccessful. Management is emphasizing a forward-thinking approach for the company's future. One key strategy is the integration of property and healthcare services, aiming to create a comprehensive service chain that covers various aspects of patient care. This initiative will enable the company to provide more holistic support to clients. In addition to this strategic move, management is committed to prioritizing quality and customer satisfaction. The company values its clients and strives to continuously improve products and services by adhering to high standards in quality management systems, occupational health and safety, and environmental protection. The company also emphasizes the importance of operating with integrity and compliance. Management prioritizes community engagement and considers the interests of communities where it operates, ensuring that business practices align with relevant laws and regulations. Despite these positive outlooks, management acknowledges that the company's growth will be influenced by macroeconomic conditions in key regions such as Hong Kong, China, the US, and the UK. This indicates a cautious approach to future projections, recognizing potential challenges that may impact business performance. The company's financial activities have been documented in various sections of its reports. One notable aspect is the payment of dividends to shareholders. According to the records, the company has indeed paid dividends, as mentioned on pages 134 and 288. On the other hand, the company has not engaged in share buybacks. This decision suggests that the company may be prioritizing other financial strategies or focusing on growth initiatives rather than returning value to its shareholders through share repurchases. That concludes the financial summary for GR Lifestyle Company Limited. Feel free to comment below, and I will be happy to answer them when possible.